You've heard the breaking news this morning, the president pushing ahead with these tariffs on China. How do you expect Asian equity markets to react today?
Well, good morning, Dan. Not well would be the short answer. You know, obviously this is very disappointing, and history shows you these type of things are usually a lose-lose scenario. It's not entirely unexpected, though. Obviously the market has been discounting an escalation in the level of tariffs imposed for some time. And if there is a silver lining, I guess, is that it's coming in at the lower end of the range that was expected at 10%. So it does leave the door open for rapprochement, but you know, obviously the markets will be pretty gloomy about it today.
Yeah, absolutely. We'll see if we can pull up the NZX 50, which is the first market to react to these news. I can see it is on the move at the moment. Geoff, how do you expect these new tariffs to impact the president's ability to get a deal done with China?
Yeah, who knows? I mean, the whole premise is that this is a negotiating sort of tactic, and one will have to see whether that proves to be the case, or indeed, you know, it's a policy designed to curb that trade deficit that the US runs with China, which is what, you know, north of $350 billion. But, you know, it's worth noting that the Chinese economy today is far less reliant on exports than perhaps it has been historically. And although, you know, a tariff on $200 billion worth of goods is clearly a big number, particularly in the context of their bilateral trade, in the overall scheme of things of both economies, with merchandise trade exports in the order of, you know, $4 trillion, it's still probably a manageable number from the perspective of the aggregate economy.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.